Is Canada's housing market finally turning a corner? Well, RBC just dropped their latest forecast, and let's just say it's not the comeback story that most people were hoping for. In fact, they're warning 2025 will not feel like a full recovery. But here's the twist. Not every city is playing by the same rules. Some are quietly powering ahead, while others are stalling. Hi, my name is Deloshan, and welcome back to another episode of Real Estate Watch. Today, I'm breaking down RBC's housing forecast and what it means if you're a buyer, seller, or investor in today's market. So here's the deal. Canada doesn't have one housing market. It's a patchwork. RBC says the national story is messy. No massive crash, but no quick rebound either. Instead, it's what I call a grinded out market. Sales will recover slowly, prices won't shoot back up overnight, and affordability will remain tough, even if rates were to go down. And here are 3 quick things to keep in mind. Number 1, properties in the GTA and Vancouver often hold their value better than the headlines suggest. Number 2, certain cities are stronger because of jobs, migration, and tighter supply. And number 3, pre-approvals aren't bulletproof. Your buying power can shrink even if rates fall if your debt, income, or credit changes. So here is RBC's forecast. 2025 will still be weak. Sales are soft, affordability is stretched, and inventory is rising in Ontario and British Columbia. Sales are basically flat, up less than 1%, say. 2026 looks mixed. Sales might improve, but prices could still dip slightly. So it's a yo-yo market. Up a little, down a little, no fireworks here. Some places will hold steady, others will soften, and a few might surprise us on the upside. So why does recovery feel so uneven? Well, it's not just the interest rates. It's also tighter lending rules, less immigration growth, rising property taxes, and higher insurance. Also, there's lower consumer confidence and a backlog of listings in Ontario and BC especially. So this isn't one big crash, nor is it one big rebound. It's a rolling reality check, different for every region. Now, RBC says Ontario and BC is still the weakest. High prices, high inventory, and low confidence. And the Prairies is the strongest. Calgary, Edmonton, and Saskatoon. Prices are affordable, strong jobs, and migration. And Quebec, more balanced. Affordability isn't as bad. And Atlantic Canada is still resilient. Lower prices and demand for retirees and remote workers. So what's the takeaway here? Well, if you're a buyer, protect your pre-approval. Don't take on new debt. Stay consistent with income and credit. Waiting doesn't always mean lower prices. It just means more choice, often with higher borrowing costs. And if you're an investor, focus on the fundamentals, jobs, schools, transit, and avoid investor-heavy condos or buildings, where fees are rising faster than the rent. And if you're a seller, price it realistically. Don't chase last year's numbers. Price for today's market if you want to sell. The faster you accept the number the market is giving you, the better it is. So, is Canada's housing market on the mend? Kind of, but it's uneven. And in some places, it may feel like recovery never comes. And that's just the reality. And remember, opportunities are local, not national. So if you found this video helpful, don't forget to like, share, and subscribe to the channel so you don't miss out on future updates on the GTA housing market. Thanks for watching, and I'll see you in the next video.